welcome you tuned into the SBI Live studio. You're watching Buy Now Sell Now with me, Ankita Saxena, and with me is Kanishka Sarkar. In this show, we get all your stock-specific questions answered. But before that, let's get started with how the market is really shaping up. Kanishka, as of now, we are holding pretty steady actually, above the 24,800 levels. So we are holding steady today as far as Nifty is concerned. We do see Nifty Bank that was seeing a bit of a selling pressure. It's turned absolutely flat, but nonetheless in the red as of now.
Absolutely. It's a pretty good day coming in. No huge gains, but still we are at least managing to hold above that 24,800 level today. In terms of top gainers, of course, it's Infosys that is leading the charts with 4.5% of gains as we speak on that news that it's going to mull a buyback later this week. And it's supported by other tech players as well. Wipro up 2.5%, Tech Mahindra 2 gaining 2% as we speak. On the other hand, some of the other gainers in the Nifty, top gainers include Dr. Reddy's, Adani Ports, again HCL Tech and TCS also supporting the rally. The ones that are on the losing side, on the flip side, there's Eternal, which is down more than 1%, Trent, Titan, Shriram Finance, all on the losing side. Now, if we take a look at how benchmark indices are doing, on the other hand, Sensex, as I said, is above the 24,800 mark. Sensex 2 is trading. Nifty is above that 24,800 mark. Sensex, on the other hand, is up nearly 0.3% above that, holding above that 81,000 mark. In terms of sectors, it's Nifty, IT and Pharma that are leading the pack. On the other hand, it's only Realty, Auto and PSU banks which continue to trade in the red as of now. So that's how the market is largely shaping up with the NSE advance decline ratio in the favor of advances. Ankita.
Absolutely, Kanishka, that's how the market is shaping up. But let's talk about, let's zoom into the buyback that Infosys has announced. In the back of that, the stock was up in a way almost 4% in the trading session today. There it is up in a way 4.5% in the trading session on the back of that buyback coming in. But to weigh in and give us some color on what can possibly transpire, let's get on board Rahul Jain, Director of Research, Daulat Capital, is now joining us. Hi, Rahul. Thank you so much for joining us on the phone line. Rahul, tell us, what can we expect from this buyback? An ordinary resolution that is perhaps below the 10% net worth, a special resolution that's above the 10% in buyback size. What can we expect?
I mean, difficult to conclude at this point per se on that particular aspect, but going by the past trend, it more looks like closer to 50 to 60% of the free cash flow which they might like to give back in terms of shareholder returns could form the buyback size. So that would moreover imply anywhere between 11,000 to 12,000 crore, which is maybe an uptick of up to 20% of the previous buyback size they did. So that's where we are thinking about it at this point.
So that's the price band that you are looking at. Hi, Rahul. This is Kanishka also joining in. Just wanted to understand with this as the expected price band, do you think Infosys valuations are still reasonable, or do you think the company is essentially using the buyback to defend the stock price as of now?
See, in terms of valuation, of course, the valuations have been pretty reasonable. Even if you look at the Q1 earning, the price is currently below the Q1 earning price, although relatively the results were better compared to the peers. I think there are other aspects in terms of what's happening in the US market, even from an economic point of view, and also a lot of uncertainty around how the tariff ecosystem will play out. So some of those factors remains the concern for the valuation in general for all IT companies, including Infosys. So if you ask me, absolute valuation, they are good. Companies doing better versus the peer. But the concern around some of these uncertainty would also play into the valuation going forward. In terms of the buyback, I think one thing is for sure, once it is approved, there is a definite support that would come from a market buyback if they announce in that format. So that is going to support. But outside of that also, if you see, it's more of a generic trend. It's not something they are doing it out of an attempt to do it in a specific manner. This is something which is already articulated as per their payout policy.
Okay, Rahul, so the last time, the company gave 30% premium, the share price was around 14.50, and today also the price is around the same levels. Can we expect more premium this time?
Yeah, I mean, see, generally there is that maximum buyback price, which is what they announce, which gives the cushion in case the price run up post that announcement or the announcement of the earning. They should be able to conclude the total buyback size. So, assuming this is going to be a market buyback, let's assume today the price is roughly 1500, and if they say 1800, it is up to 1800. So they will keep doing the buyback from the market basis, whatever is the price in the market, and the subsequent average price could be basis about how the stock would trade over next few months. And in our view, the way the earnings are likely to shape, the way the uncertainty continues around the US and India tariff standpoint, I don't think the price is going to see a major positive boost. So with that logic, the effective buyback price could be similar to the last round, but these are very difficult things to ascertain at this point.
All right, so that's the view coming in on the insurance Infosys buyback that's due. The announcement is due later this week. Thank you so much, Rahul, for joining us and giving us a perspective on what kind of price band are we looking at. On that note, we'll let you go. All right, then we'll head into a very short break, and on the other side, we'll answer all your queries that you have been sending us. But if you still haven't sent your query, do send in. Don't forget to mention your name, your stock name, your holding period, and your specific stock query. The number is flashing right on your screen, so do keep sending in your queries.
Welcome back. You tuned into bnsn with me, Ankita Saxena, and with me is Kanishka Sarkar. And this is the show where we get all your questions answered. The number is flashing on top of your screens. Keep sending in your questions and we'll get your questions answered. Now remember, we are also going live with the callers. So keep sending in, and if you want to feature on a show, write into us and we will get all your questions answered live by our guests. And for that, we are now joined by Kunal Parmar, who's the Vice President Technical Research, and Alvo Choice Equity Broking, who's now joining us on the technicals, and Lancer Dikuna, Chief Investment Officer of ValueX Wealth Connect LLP, who's joining us on the fundamentals. Hi, good morning to both of you. Thank you so much for joining us today. All right, so let's get going with all the questions. The first question that's coming in today is from Sunil, who's writing in from Bengaluru. He says he has 500 shares of Patel Engineering. He's holding it, he's bought it at a buying price of 103 rupees per share. What should he do now? He has not mentioned the time frame, but Lancelot, if you cover Patel Engineering, what do you see for the next 1 odd year?
So I think if you look at the valuation, the stock is pretty reasonable as far as business is concerned. They have been generating a reasonably good amount of orders, and the addition has been good in the last quarter. So given that background, I think one can look at either holding on to the stock definitely, and you can even add some more, because private capex, which has been a little bit slow, is also expected to increase over the next couple of quarters, and that should mean additional business for the company, and as well as profit growth. So it's a good time to probably average and buy out the stock if you're looking at a 3 to 5 year horizon.
Okay, so that's about Patel Engineering. But moving on to the next query then. Lancelot, let me come to you again. This one is coming from M. Seshu Kumari, who's writing in from Vijayawada. Their query is on Torrent Power. They have 120 shares at a price of 1,400 rupees. They want to know what is the future looking like, how are the fundamentals looking. They want to sell in a period of about 6 months to 1 year. What are the future rates that she could look at? Any target price that you would like to give for a 1 year period?
So for a 1 year period, it's a little difficult to say, but this stock has actually, had risen significantly on the back of the fact that the power generation as well as distribution was in a space where there was a lot of interest from investors. And over the last couple of months, maybe from September, October onwards, it has seen some price correction. as well as business has slowed down a bit in the last quarter. Results were relatively, muted, and it still trades at a reasonably higher valuation. So maybe a bounce could be any slight bounce on a technical side could be a reason for you to look at booking profits and exiting from the stock.
All right, so that's the word coming in on Torrent Power. But let's move on and get a live caller on board now. This is Govind who's joining us from Hyderabad. Hi, Govind. Good morning. Thank you so much for joining us on the phone line. Govind, tell us what's your question.
Good morning, ma'am. All of you, thanks for picking up my query, ma'am. For last 1 week, I have tried actually. Ma'am, actually, regarding this, I have invested 5 lakhs rupees for MCX, ma'am. Can I right time to invest, ma'am, for my children education? These are all actually. Is it fundamentally is okay, ma'am, and technical, how is it?
Right, Lancelot, MCX. Now, interesting question, because MCX, what about the valuations? Do you see MCX, if the valuations are looking stretched, he wants to hold it for the longer period of time. What do you think? Should he be getting in once there is more correction, or should he be holding it on right now at the current levels as well? And what is the time horizon he should be holding it on for?
So, I think valuation is a little bit stretched, while the stock has seen a stellar run, even from from March onwards, it was at around 4,600, and it went all the way up to 7,500 levels, and now is around the same range. So expectation is good, and this is one of the exchanges which has almost 70-80% of the metals and commodity trading that happens in the future there. But like most exchanges, there is a high regulatory risk. So one has to be a little cautious when investing at high multiples, because you are actually upfronting the future growth at this point in time. So given that background, I think making fresh investments at this point of time is not really advisable. One should wait for any, at least a further 5 to 10% correction from here, and then one can look at starting to add. At the same time, if one is a long-term investor, one should stay invested and maybe add to the position whenever there's a stock decline, because the long-term business outlook is very strong in this company and margins are high. It operates mainly on a fixed cost basis. So any increase in revenues, adds to the bottom line directly. So one should look at, holding on to this investment and adding on declines.
All right, you could consider holding MCX and add on declines. That's the word coming in. Govind, hope your query was answered well. But moving on to the next question then. This is coming from Narayana Reddy. He's writing in from Warangal. He has queries on 2 stocks. He has 40 shares of Keynes Tech at a price of 6,200 and 50 shares of Polycab at a price of 6,100. He wants to know, should he book profits at the current level or should he stay invested? Lancelot, what would you suggest?
So I don't really track Keynes Tech much, but as far as Polycab is concerned, I think his holding price, his entry level, his entry cost is pretty good, and he should continue to hold, because going forward, I think one will get significant upside, because all these GST cuts and the whole, the whole consumption demand that will get spurred in the economy will benefit Polycab, as they are one of the leaders in the cables and wires business, as well as, in the switches. They've also entered the switches business. So this company will see significant growth both in revenues and profitability going forward. So one should continue to hold the stock for the long term.
All right, so hold on to that counter, but let's move on to the next counter that is in question, and that is the question is coming from Perumal from Chennai. He wants to know about Varun Beverages. He's bought it at a buying price of 503 rupees. He wants to know what will be the impact of GST change, what is expected, what is the expected downfall that you can perhaps expect on Varun Beverages. Now, Lancelot, Varun Beverage, though fundamentally a strong stock, is the second largest bottler for Pepsi, but the stock has been under pressure for the last 6 months. It has been in a corrective phase. What would be the possible impact of GST? Because now GST will see a 40% GST on sugary drinks, aerated drinks. What could be perhaps the potential impact on Varun Beverages, and what do you see for the long term, say a 1 or 2 year period for Varun Bev?
So, definitely the GST would have an impact in the short term, and it might impact the volumes as well. So you could see financially this having a bit of an impact, at least in this year. But I think over a period of time, people will continue to consume carbonated drinks, and then a lot of Pepsi's products are also moving into the the health juices and things like that, and that should probably the mix of their business might get realigned a little bit, and that should help them. The other important aspect for Varun Beverages to consider, that one should invest in this company from a longer term perspective, is that they have also taken up franchisees of PepsiCo in countries in Africa, and that is beginning to see some traction. And with that investment, generating income both from earnings as well as on a profitability basis, Varun Beverages will benefit significantly from that growth. And whatever GST impact it has in India will not have any impact on those businesses, and that should counter it in the short run. So definitely it is worthwhile looking at Varun Beverages from a long-term perspective.
All right, so worthwhile looking at Varun Beverages from a long-term perspective. That's the query coming in. That's the view on Varun Beverages. But moving on to the next question then. This one is from Radhakrishnan. He wants to know, Lancelot, your view on Dr. Reddy's and Tata Motors. Is it a good time to make fresh buys into this stock? He has a holding period of nearly 2 years. So what do you suggest, both tariff-sensitive sectors?
Yeah, I think as far as Dr. Reddy's are concerned, one is the tariffs, and second is there is an emerging change in the entire business model of most of the pharma companies, especially with their business related to the US. So as there's a focus on, drugs which are going off patent, people are looking to try and reduce costs. The pharma companies have to sort of re-engineer themselves to cater to this new environment, and that process might have a bit of stress in the system. So in the short term, yes, there could be some amount of pressure as far as pharma is concerned in terms of both sales as well as profitability. But over the longer period of time, yes, things will look, the long term outlook is still very strong for those companies which can manage the changing environment. So I think Dr. Reddy's at the moment, in terms of valuations, there could be a further 5 or 10% correction. So it is a stock which one can accumulate on the declines, and then you need to monitor and see how they are changing over the next 2 to 3 quarters. That would give you a fair idea as to whether to continue to hold it on for a longer term.
Right, so that's the view coming in on Dr. Reddy's lab. But let's move on to the next question that's coming in. Now, this one's coming in from Poonam from Punjab. She says she holds 1,500 shares of Equitas Bank, and she's bought it at a buying price of 77 rupees. She wants to know what's your view on that, Lancelot. What's your view on Equitas Small Finance Bank?
So, while small finance banks were focusing on specific segments of society, and they are able to, given their business model, become fairly attractive or profitable at that scale and size. For a bank to grow beyond, the small finance area, they need to diversify and actually expand their size. So that becomes a major challenge for a bank like Equitas Finance, Small Finance Bank, to make this transition and compete with the large commercial banks, because the larger banks have been able to, will always be able to raise resources at much lower costs, and that will put them at an advantage over the smaller finance banks. So while Equitas Finance banks may offer short-term, opportunity, I think in the longer run, it is better to switch to some of the larger finance banks, and bank companies, because those will provide better returns going forward over the longer period of time.
Okay, so that's the view on the financial space. But moving on to the next query then, now we have our caller Nalini joining us from Chennai. Hi Nalini, very good morning. Tell us, what's your query?
Good morning to all. I am a regular viewer of this program. I have 120 shares of Balmer Lowry Investments, bought at 89.20. Shall I hold or accumulate for a decent return?
Okay, Kunal, let me come to you for this one. What's the view? Balmer Lorry Investment?
Well, if we talk about this counter, right now counter is trading at 236 level. Stock has been trading with its strong positive crossover of 100 into 200 as moving average. So we may see a further upside momentum in this counter. Not only this stock has already given a breakout of its multiple resistance which it was placed, and that was placed at 224 level. So yes, based on this technical structure, a good upside momentum would be there up to the level of 245, and if stock breaks this level, then further upside would be there up to the level of 265. So yes, from my side, it's whole side as technical structure looks very positive for this counter.
Right. That's. I hope you've got your question answered, Nalini. Thank you so much for calling us and joining us. Let's move on to the next question. That's coming in from Bharti, who's writing in from Dubai. She says she has GMDC, 1,000 shares at a buying price of 86 rupees from the last 15 years. Should I continue to hold a book profit? Wow, congratulations to you for holding it for more than a decade. I mean, someone's really patient with their stocks. But Lancelot, GMDC, she's sitting, she's bought it at a buying price of 86. So clearly, considerable profit is what she's made. Again, congratulations to you for that. But at this juncture, what should she do?
I think it's better to book profits and look at exiting, because over a period of 15 years, if you bought it at 86, it's at about 500, 570 not. So definitely it has given reasonably good returns. But to expect that this stock will continue to give the same kind of returns over the next 10 to 15 years is very difficult to envisage, and given that valuations are trades almost 25 times earnings for a mining company, that's a really high valuation. So one should look at booking profits and exiting.
All right, so you could consider booking profits in GMDCs. That's the view coming in. But on that note, we'll take a very short break. Don't go anywhere. We'll answer more of your queries on the other side.
Welcome back. You tune into SBI Live Studio. You're watching Bayana Salna with me, Ankita Saxena, and with me is Kanishka Sarkar. And this is the show where we get all your questions answered. And the number is flashing on top of your screen, so you can keep sending in your queries. And now we're joined on the phone line by a live caller, Joseph Thomas, is joining us. Hi, Joseph. Thank you so much for joining us live. What's your question?
Yeah, I'm holding Cochin Shipyard shares. I bought it at 2,234, 35 shares around 2 years now I'm holding. I would like to know whether I can hold this, or is it a good stock to hold on?
Lancelot, Cochin Shipyard, he's been holding it for the last 2 years. Clearly, he's sitting at a loss as of now. What should he do for the long-term bet, or how long should he be holding on to it? And what would you say about Cochin Shipyard?
See, while the growth prospects in Cochin Shipyard, given the order accretion that they have received, a lot of fresh orders, it appears to be good. But this is a longer term business. It takes almost a year to 2 years to just deliver one particular ship and complete one order. So, and in that, there are profitability definitely is an issue. So if you look at the stock, even after the fall from his price, it is at presently around 1600. It's still trading at 51 times earning, which is probably discounting the next 3 to 4 years earnings in the price. So at this point in time, I think it is either you have to wait for a further 10-15% drop, and then maybe accumulate the stock at a much lower level, around between 1200 and maybe 1250, when the multiple then corrects to a reasonable quantum. Or one should consider that it's worthwhile, booking the loss at this point of time and move into stocks where the short-term growth profitability is much higher and they're trading at reasonable valuation, so that you can get some upside in a much shorter period of time.
Okay, so that's the fundamental view. You could either book your losses or stay put and wait for another correction to accumulate on the dips. But Kunal, let me come to you. What are your thoughts? What are the charts suggesting? Could we see any upside in the 6 to 1 month period? Anything is that kind of an upside possible? In the past 1 year, the stock has declined nearly 10%. Will that continue, or do you see some kind of upside over the next 1 year?
Well, we may see some kind of bounce back because stock is trying to sustain above its 200 days moving average, which is placed at the 1630 level. And even before stock took the support of the 7, afterwards it went up to the level of 2200 to 2400. So we can expect the same replicate momentum at present level. I think from my side, it's a hold suggestion. If we talk about the upside, bounce back, then we may see bounce back up to the level of 1835, and if stock sustain above this level, then the one day rally would be there up to the level of 2300. Stock looks very attractive on daily chart. Please hold this stock as of now.
All right, so that's the view on the technical charts for Cochin. I hope your question is answered. Thank you so much for joining us on the phone line. But let's move on. Let's move on to the next question that's coming in. The next question that we are getting is from this one's coming in from, okay, there's no name here. So, okay, no questions. We won't be able to take your questions if you don't have a name there. We'll move on to the next question. This is coming in from Narayan from Bangalore. He says he's a regular viewer of the show. He wants to know if he bought that last week he bought 300 shares of Aditya Birla Fashion at a buying price of 80 rupees and Arvind Limited at an average price of 280 rupees. What's your advice? Should I stay invested, book profits? What would be your advice, Lancelot, on Aditya ABFRL and Arvind Limited?
So I think if you take Arvind Limited has significant exposure to the US markets as well. And that could see significant downside. So in that case, in case of Arvind, I would suggest that it's better to book profits and exit and maybe see how the situation as far as the US is concerned plays out. As far as Aditya Birla Fashion is concerned, the stock is still trading at a higher level because in terms of financials, the company still makes a loss. For the last quarter, it reported a loss of 211 crores, which is, even though there was a growth in the turnover, but, you are seeing a loss. Maybe with the improvement in the GST rationalization, you could see some improvement in the profitability of the company, but it is in a very competitive segment. So even in that case, I think one should look at, booking your profits or exiting the stock and move to companies where you can see some amount of profitable growth, building it into the share prices.
Okay, so that's the fundamental view there. But Kunal, let me come to you as well. ABFRL and Arvind Limited, what do you see on the charts there? Do you think we could see some kind of an upside coming in for these counters, these textile counters over the next 6 months? Of course, on the news front, there's some tariff-related uncertainty there was. But on the charts, what do you see?
Well, if we talk about Arvind Limited, right now trading at 299 and chart indicates for further upside momentum from the present level. Stock is trying to give a breakout of its last three trading sessions range bound momentum, and we may see upside up to the level of 310, and if stock sustain above this level, then further upside would be there up to the level of 342. So based on the chart, it clearly indicates for an upside momentum from the present level. So technically, I think one should hold this stock as of now. And if you talk about ABFRL, right now stock is trading somewhere around 89 to 88 level, and it is trying to give a breakout of its range bound momentum. Right now trading at 90 level, so we may see some kind of further upside momentum in this counter up to the level of 93 to 94. And if stock sustain above this level, then further upside would be there up to the level of 99. So from based on the perspective of technical chart, I think both stock looks very good. I think one should hold both the stock as of now.
All right, so that's a technical view that's coming in. But let's move on to the next question. Manoj from Doha, Qatar is right. He's writing in. He says he has 5,000 shares of Motherson Sumi Wiring. Please suggest if he can invest more into this for the shorter term. Kunal, I think for a short-term query, let's get you on board. What would you suggest for a shorter period of time for Motherson Wiring?
Well, if you talk about Motherson wiring, right now stock is trading at 47.50, and we have seen a very good upside momentum, and stock has already given a breakout of 44 level. Since last few days, stock has given a exceptionally good momentum with a positive crossover of 100 into 200 days moving average. So further upside would be there up to the level of 49, and if stock break this level, then one way rally would be there up to the level of 53. But if you have this stock, then hold this stock for a good upside momentum. But I'm not suggesting to go for long at reasonable for fresh buying. But yes, if you have this stock in your holding, then hold this stock. We may see good upside momentum up to the level of 53.
Okay, so that's the view coming in on Motherson Wiring. But moving on to the next query then, this one is coming from Jagat Trivedi. His query is on SJVN. He's been holding 1,000 shares. His buying price is 132. He wants to know whether it's a good time to average now or exit in loss. I'm sorry, this is, I got the query wrong. Yeah, sorry. So this query is, yes, this one is on RVNL. The viewer is writing in from Sydney. He has RVNL shares bought at a price of 25. He wants to know whether he can continue to hold for another 10 years. Lancelot, what do you suggest?
So RVNL is a public sector, engaged in the construction of railway projects and transport infrastructure. There has been a good focus in terms of the government, granting more and more orders for expansion in the railway segment. But if you look at it from a profitability perspective, the company's, profitability is quite low. It has a profit margin of about 3%, operates, does a turnover, last quarterly turnover was about 3,900 crores and a net income of about 134 crores. So while the order book is high, you are seeing pressure on profitability, and that was likely to continue. So given that the valuations are a little on the higher side, I think it is better to exit the stock and maybe wait for some re-rating. If it does correct, then one can look at again buying into it. But at this point of time, given the financials and the high valuation, one should look at exiting.
All right, so that's the view coming in on RVNL. Let's move on to the next question that's coming in from Anupama, who's writing in from Bangalore. She says she has 970 shares of NTPC Green at a buying price of 111. Can she hold it for the next 2 years? Lancelot, what is your view on NTPC Green?
So I think NTPC Green one can continue to hold, although it also is, valuation wise, a little expensive. But at the end of the day, you are seeing more traction on the renewable energy space, and NTPC Green will continue to add more and more projects, and that will, as the capital gets deployed and you start seeing more returns generated from these projects, the company will start to become more attractive. So one can look at holding the stock and maybe adding on declines.
You on NTPC Green, but moving on to the next query then. This is coming from Subrata Mukherjee, who's writing in from Kolkata. Their query is on Godrej Properties. They want to know whether it's the right time to invest, like buy fresh into Godrej Properties. Lancelot, what do you think? They want to put their money from an investment perspective, though they haven't really written their time horizon, but they say they want to make an investment into Godrej Properties.
I think Godrej Properties is, one of the few developers who are focused on the metro cities of Mumbai, Delhi, and Bangalore. They've seen a good traction in terms of order accretion. The number of bookings have gone up, and whatever businesses that they have been, the new projects that they've been executing, have seen good demand. However, the stock is still trading a little bit on the expensive side, so one should look at, one can look at investing in this company, but maybe wait for a bit of decline, maybe another 10-15% would help in terms of ensuring that you're not buying at a high valuation and thereby your profits could be enhanced at this levels.
All right, that was the last stock for the day. Lancelot and Kunal, thank you so much for taking the time out and answering all the stock-specific questions. We'll move on to the story that's coming in on the insurance space as GST on health and life insurance premiums are now cut to nil. Insurers are mulling ways to pass on the full benefit. ET now learns insurers may explore the EOM rules and restructuring distribution expenses to offset input tax credit loss. My colleague Anurag Shah is joining us with more details on that.
After exemption of GST on health insurance and life insurance premium, government has asked insurers to pass on complete benefit to policyholders. But due to ITC component, insurers are unable to pass on the complete benefit, but there is a complete diktat from government to pass on the benefit to policyholders. So now insurance companies are reviewing the cost analysis and how the distribution cost can be lowered down so the complete benefit can be passed on to policyholders. So after the single limit EOM rules, insurance companies can change the percentage of commission they offer under their various line of businesses, and insurance companies can also use tech and AI to reduce their expenses. So with these rationalizations, insurance companies are thinking to pass on the complete benefit. For the general insurance companies, it would be possible to pass on the benefit, but for SAHI companies, finding it difficult because ITC component for them is 3 to 5%. For some companies, it's more than 5% also. So for SAHI companies, they have to review the strategy completely, but general insurance companies are hoping to pass on the benefit, complete benefit also with the help of rationalizing their expenses and distribution cost and with the use of technology and artificial intelligence.
All right, with that, it's curtains down in this edition of Buy Now Sell Now. Kanishka and I will take your leave. Tomorrow we'll meet you again at 11 a.m. with all your live stock-specific queries. But for now, goodbye.